Relying on historical price charts to predict market movement is a strategy designed for a slower era. But when information moves at the speed of light, the static patterns of the past begin to dissolve. Today's modern markets operate as reflexive systems. They respond instantly to information velocity rather than historical trends, meaning the price action you see on a screen is usually the final result of a move that has already happened. Social intelligence has emerged as the primary leading indicator. It is the real-time measurement of narrative momentum, developer activity, and crowd sentiment across millions of points of contact. This illustrates the operational divide. Traditional analysis follows a rigid path based on where the market was. Network tracking monitors a pulsing web of live data to find where the market is converging right now. Waiting for a breakout to register on a price chart often guarantees a late entry. AI-native market intelligence provides the only viable way to process this raw network data before the price reacts. In late March 2026, the SIREN token surged 143% in 24 hours. The project climbed to a $1.68 billion market cap, moving into the top 50 assets before most retail traders even noticed the volume. Capturing a move of this scale requires isolating the specific catalysts that precede the price spike. Digital patterns formed well before the breakout. Sentiment shifted in niche Discord servers. Social mentions began to accelerate, and historically profitable wallets started accumulating tokens in a coordinated fashion. A human trader cannot physically track or correlate these events. You cannot read 10,000 social posts and cross-reference them against blockchain transfers in real time. AI-native platforms serve as the infrastructure for this exact workload. They are designed to monitor the entire digital landscape simultaneously. Every second, these systems ingest millions of unstructured data points, from GitHub updates and exchange flows to global social sentiment. The value lies in parsing that data. The system must separate the meaningful signals from the sheer volume of background noise. Machine learning provides a clear advantage in this environment. It enables the measurement of present market conditions at a scale and speed that exceeds human biology. The process begins with the mass ingestion of data. Unstructured information from social feeds, macroeconomic reports, and on-chain metrics pours into the intelligence funnel. Inside, the system applies natural language processing, or NLP. NLP is a branch of AI that allows machines to interpret and categorize human language. A scanning laser sweeps the data, dissolving bot-driven spam into red dust while allowing organic human sentiment to pass through. As the filtered data concentrates, the system looks for a change point. A change point is a sudden, mathematically significant deviation in normal data patterns, the moment a narrative begins to pull away from the baseline. The funnel then outputs a clean, quantifiable alert. Billions of interactions are distilled into a single pulsing node that indicates a high probability opportunity. This mechanical process turns the noise of the internet into a structured trading advantage. Institutional speed advantages that once cost millions are now accessible to the individual trader. Financial intelligence has become decentralized. However, this speed creates new vulnerabilities. Algorithms can be manipulated by coordinated bot armies, designed to manufacture artificial hype and trigger false buy signals. AI provides a compass, not an autopilot. The challenge for the trader is still identifying which signals are sustainable and which are temporary spikes. The technology is moving toward ERC-8004 autonomous agents. This Ethereum standard gives AI agents verifiable on-chain identities to manage wallets and interact with smart contracts. When a signal is identified, the agent executes trades across multiple networks in milliseconds, removing human delay. Manually tracking this data is no longer a viable competitive strategy. The trader's role is shifting toward overseeing the systems that filter the noise. Future market dominance relies on human intuition filtered and amplified by these machine learning co-pilots. The edge belongs to those who can direct the tools that move faster than the chart.